I'm fascinated by this. I didn't know life insurance, we think of it as protection, but it can actually be a tool that really accelerates your financial well-being. And you guys are the Jedis, the ninjas of all this. What does that look like, Shane? Explain to me how that can possibly be on planet Earth.
I like Jedi. That's the second time this week I've heard that. So thanks for bringing that up.
Yeah, take it away.
Next time should be Beyonce Jedi.
Beyonce Jedi.
We're mixing cultural metaphors now.
Hopefully not.
Survive.
For a lot of people, they think of life insurance as a cost. It's something you pay for, hopefully you never have to use. And then when you do have it, you kind of just stop thinking about it. And for us, that protection is super important. That's one element to what we do. And it's important is, let's say you have a family member, you're talking about the farmland, you have those key individuals or those key business partners, and that life insurance is in place to really provide stability and liquidity, when we need it most, when the proverbial stuff hits the fan, so to speak. But with permanent life insurance, and specifically I'll talk about whole life here, there's another dimension that most people have never been shown or don't really understand. And that's really what I wanted to drive home today, was just, it's kind of a Swiss Army knife. It does a lot of things for people. And it can function, as I mentioned, as protection, but it can also function as a long-term asset on a balance sheet. And it really is quite straightforward. So, if we think of life insurance and a policy, when you pay that premium into a whole life policy, a small portion of that goes to cover the cost of the insurance, the net cost of insurance. That's really the protection component. Whereas the remainder stays within the policy, and it begins building value over time. And I'll break that down a little bit further because some people may not be familiar with it, but the life insurance companies, they operate very similar to pension funds, where they invest in very safe, very long-term, 10, 20-year laddered out bonds, infrastructure funds, things of that nature. And the idea is they manage those assets and they grow them over time. So that's what I mean when I say it stays in the policy and it builds value over time. So that value is called cash value, and it belongs to the policy owner, meaning the person that owns the policy. And that, as it grows steadily over time, it's also growing in a tax-deferred environment. And that's super important. Because it's contractual, it behaves different than what you might see in a traditional type of investment. The easiest way to explain this to farmers is compare it to something everyone on this call already understands really well, which is farmland. And when you purchase your land, some of what you spend goes to op costs. And, the reality is over time, that land will also build equity. And that equity grows, it's quiet, it's stable, it's tax efficient. And, what's important is you don't need to sell the land in order to make use of that equity, because banks are willing they recognize that value. I mean, think of your Robert Angelic podcast you had, they're willing to lend against it, whether they're tightening or not. So whole life insurance works very similar. And that cash value that I talked about, it builds over time. And as I mentioned, it's tax deferred, and banks across Canada, they recognize that value, that cash value, and they will use it as collateral. So when we structure these policies, and they're complex, some of the stuff we do is very simple, from a simple term life policy all the way to, complex structure, as Ryan mentioned, working with the advisors, the client's advisory team. We come in as shoulder to shoulder with them to make sure A, corporate structure is correct, B, where the insurable needs of the client are being met. So it's very important that we structure this properly. And when we do that, whole life really stops becoming an expense line on an income statement, and it really becomes an asset that sits on the balance sheet. And that sits there with all the other assets, which is really important for people. And that's for anyone on this call that's involved in agriculture. Hopefully that's a bit of a light bulb moment, because most farm balance sheets, they're really concentrated in one asset class, and that's land. And I mean, let's face it, land's done incredibly well over over the past few decades. But when all your equity lives in one place, every decision eventually runs through that one asset, and that can become problematic. So whole life introduces another form of, think of long-term capital that behaves differently. It's not there to replace the land. It's meant to really complement it. And that ultimately what it's meant to do is provide more flexibility for families when they start thinking about things like what Ryan and yourself and everyone on this call have been talking about. That's growth and succession and long-term planning. So hope that gives a little bit of an overview of whole life, for example, and really how we can start thinking about it differently.
Well, I'm going to take a wild guess and just speculate that most people on the call here like assets, and having that diversity. We're going to have some further conversations here on the show about some of the things that are happening in the farmland world.